Tuesday, March 28th, 2:09 p.m. New York time. Good afternoon. Day trading. So I'm going to show you part of my setup that includes the day trading. Whatever financial markets you select and financial instruments, I highly recommend you make sure those financial instruments have the best liquidity, the best spreads. Otherwise, you're at a lot of risk. To experience both of those. I'll give you an example. You might be trading equity, aka stock, where the stock's more likely to get halted if they're penny stocks, stocks under $5, but any stock can be halted. Versus if you're trading futures contracts or options on futures, as well as options on equities that are very liquid, that's a lower chance of the risk being halted. There's a lot more to go over, but that's one thing I just wanted to mention at the beginning, because there's a lot of people that only are aware of one financial market and only trade one financial market. That might be just the stock market. So here we're looking at the futures. We have 9 grids. Right now, each one's on a daily time frame, means each candle represents a day. Not all brokers offer access to this data. Not all brokers authorize their clients to even trade futures. So we're looking here at the ES, that's the S&P 500 futures. For the day, again, the market's open, that's why you see prices moving. It's currently a red candle. We took out the low of yesterday, or we're trading below the low of yesterday. The 10-year yield, we're trading above and took out the high of yesterday, green. Yeah, I know they're daily candles, but I'm going to make a point here momentarily. US dollar index trading below yesterday's inside candle, red. Crude oil broke above, trading above yesterday's candle. Gold, this is a yellow candle. I have a program for yellow candles to mean they didn't take out the high or low of the prior candle, regardless of the time frame. This is a daily time frame, but regardless of the time frame, you will see this multiple time frames. Inside candle means indecision. The bulls and bears have not decided who's in control to get it beyond outside the range of the prior candle. Indecision. The euro broke above that inside candle from yesterday. Broke above that candle there too. So that's a pattern. That's a 3-side up pattern. This one closed about midpoint, and this took out that high. The British pound above the high of yesterday. Australian dollar above the high of yesterday, and above that, again, that's a 3 inside up candle pattern. And Canadian dollar above the high of yesterday. Okay. So now let's go look intraday on the 15 minutes. Oh, if you're day trading, I recommend you stick with your entry signals off intraday timeframes. 15-minute, 5-minute, 1-minute, getting below 15-minute. You're scalping short, the 1 minute. I'm just showing this example off the 15-minute. Again, your setups off the higher time frame, but your trade signals off these time frames. So example, one could be doing the 15-minute. So look at the same financial instruments, each 15 minutes. This light gray area, as you see, those are the overnight trading, because the futures markets let you trade overnight. Yep. They close at 5 p.m. and they reopen at 6 p.m. all the way through the next day. So looking here on this S&P 500 futures, there's typically, well, there's 3 sessions most people are aware of. You have the Asian session, the London session, and the New York session, different hours. That being said, typically the Asian session has lower volume because there's less traders participating in the market at that time. And then you have the London session that has typically more traders participating. And you have the New York session, many more. Let's cue this up. Whatever financial instrument you're using, I recommend you consider applying this. Just to make it easy. I'm going to label 3 sessions. This is the London session. This is the Asian session. And then New York session. This could be done on the Forex market too, because there is data. The market's open those times. So you see these 3 boxes I drew. Again, this is the Asian session, London session, New York session. Let me take this down a little bit. So this, what I'm showing you here, should help to see some part of the range, the financial instrument trading. Get it close as possible. And like I said, the liquidity, meaning more traders are participating. That's a good thing. And typically the spreads are tighter. Being tighter spreads, that's a good thing too. Oops, wrong one. Spreads referring between the bid and ask up here. The bid and ask, the tighter it is, the better. The wider, that's good for the bookies, aka the market makers. So again, just showing you here on the S&P 500, Asian session, London session, New York session. The range, the price range from the high and low of this session, not as wide as here, right? The London session and the New York session, a lot more volatility. So you can do this on all these financial instruments or whatever one you prefer. All these financial instruments I selected here have the best liquidity, the best volume on the underlying. So the ES represents one of the many stock indexes of the S&P 500. Got it? Yep. So I'm going to put this on a higher time frame to show you. Looking at the 4-hour. Each of these 4-hour. So last night's, there is this massive consolidation that actually started yesterday. I labeled the top of their supply zone, sellers down here, demand zone. Gave it as a bearish trade idea last night. My Patreon members, whoever took a bearish, if they're still in it, they should be having gains. They already closed it, the short, then they already took profits. Again, day trading, you're not marrying it. Put it to the 1-hour. So here, and zoom in, again, zoom in here. This is all the London, again, Asian session, London session. London session had a lot more volatility. And then the New York session, look at that. Huge. It's from the 15 minutes. So if you're just going to trade one session, maybe the New York session, which I'm going to take this down to a lower time frame to show you the other ones here too. You can look at all these. Let's put this one first. And as you're watching your screen, maybe you put it on the same screen. These financial instruments, I have 9 of them here. You're looking for setups. So I showed you there. Yes, on a higher time frame, the setup, looking for entry on the faster time frame. Here, 10-year yield. You see massive supply on top. Each time it's going to these highs, it's filling. And down here, so again, supply, demand. US dollar. That low, swing low, down here, did a partial retest. So again, look at this. You have to send, this is building a demand zone. It's not breaking a low, demand zone. So you could be looking for a bullish entry here. It's a good setup. It's more of consolidation for this. The 10-year yield is trending. Here it's consolidation. Be looking for an entry here. Crude oil. It's already trending, already made that huge move down. Oh, you got to sit on the hands and wait. You're looking for setups like this, which I showed overnight on the ES. Gold, it's already a strong trend up. I wouldn't be chasing the trends, be waiting. The euro, yep, you had this high here during the New York session, and then a retest here. Again, the inverse. The euro is inside the US dollar index. Here, the US dollar index setting up what looks like bullish entry, and the euro setting up was looking like a bearish entry. Might get a pop-up one more time before we have the sell-off. British pound, it's already trending. You had a consolidation. The breakout already occurred for the entry. Too late to be chasing that. Australian dollar, same thing. You had a consolidation here, already breakdown. And the Canadian dollar, yep, consolidation. So again, consolidations, trends, just part of the process of day trading.